Hello, this is Riz from Riz International. Welcome to the Elite webinar. If you are watching this after the fact on YouTube, the recording, thank you for, of course, watching, tuning in. And if you haven't already, make sure you're subscribed, all that good stuff. We bring you actionable market insights, all the musings going on and updates, and of course, my take on things with no sponsored bullcrap, nothing to sort of promote on the external side. We don't promote no external funded accounts or any of that nonsense. No uh, garbage. Okay, no nonsense. That's the best I can put it. But continuing on, it's been a couple weeks since we convened, and you could see here. Oh boy, the market has continued to go higher. In fact, we hit another all-time high last week. Um, and we're slightly lower than that, but yeah, the market is well past the previous highs of July, right? We didn't see those July highs up until September 18th, right? Which was a high in the intraday, but it did close lower. It's only on the 19th onwards and the gap up have we really kind of broken out of this, which was potentially a short-term resistance, which is now a short-term support of right now. This is 5670 area, right? Again, 5670, 5065, sorry, is kind of the what you want to recognize this as the support. We're well past that. You can see the previous touch points very much near as well the past week. And we're kind of off to the races. And officially today, the time of this webinar. We're doing this on a Saturday. I believe it is now 1 month exactly, 30 days away from the U.S. federal election. Those of you that are live on here in the States, correct me if I'm wrong. I believe the federal election this year, this election cycle is on November 5th, correct? I still remember November 8th when it comes to 2020's U.S. election. So it's November 5th, I believe, this time around. And a lot of interesting things will be happening. So let's keep it going to the next part here. We have the sectors, right? Take a look at the sectors. Utility just continuing to lead year to date, which is phenomenal, absurd. Like, it's giving us a signal that it's I think the entire year is safe to say, maybe even more. We've had a huge amount of divergent, uh, let's say, signals in the market. You've got utilities going up. You got rates have come down a little bit, still higher than the last 15, 20-year average. We have the S&P 500 up 21%. And then all the other sectors besides utilities and XLC, which is communications, pretty much underperforming that. Everything is above the zero line. So everything is positive. All the sectors are positive on the year. But underperforming, they're all underperforming the SPY ETF, the SPX, and then of course utilities and communication. But utilities with the strongest growth this year. Obviously, I'm sure if we zoom out longer, further, it will be obviously tech and communications that will be obviously outperforming everything else on a longer time frame. But year to date, um, damn, it's like 9 months have gone in 2024 already, and here we are with utilities leading. Moving into the asset classes, look at oil, right? With more tensions, it seems like every time we meet, it seems like there's some event or more ongoing in the Middle East. Wow. So we have that going on. The oil actually dipped a little bit, even during those Middle East tensions increase with Lebanon and Israel, but it clawed that back and come right back past the 70, 72 area support and right back here at the 74.45 mark. Just you can see that flag or descending triangle, if you want to call it. And here we are. The reason being that it dropped was OPEC was saying that some of the OPEC producers, either officially or unofficially, have increased production, right? So more production equals more supply, right? And then we also saw that demand is, although there, it's just still not as strong, and the market, the oil market especially, is giving us like a signal of a potential weakening in demand and higher supply. And obviously that's a recipe for lower oil prices. But with the tensions in the Middle East, with a potential maybe another, there's musings of a supply cut, an OPEC, but nothing confirmed yet. For now, they're holding their existing production targets. The oil kind of just popped up a little bit, but still well below what we've seen, previously, let's say back in July, right? We were at about 80, $83, and then back in April, we were at about 86, right? If you go further back into last year, we were above 90 at about 93 back in September. So a little over a year ago, we're at about $93 a barrel, right? So well below that. We did play some oil trades this past week, which worked out really well, really quickly. So I'm glad with that. So um, with that said, moving on to gold. Gold, another divergence, just going higher and higher. I'm going to remove these channels here. Um, and once again, signaling to us that maybe the market is foreseeing some extra volatility, seeing an added slowdown perhaps and economically, perhaps some tougher, rougher times economically and from a equities market. So that's what gold is signaling to us, right? And it's also signaling a potential weakening dollar. But once again, we've got some divergence. And so let me point it to you to here and then take a look at this. So the Fed cut rates 50 basis points, right? Maybe like 2 weeks ago. Now, take a look at what's happened with bond yields. You guys seeing this? This upwards, I mean, it's fair to call it a little bit of a spike, honestly, in bond yields. This is not common. Think about that for a second. We've got, let's say, what, uh, maybe what we got another 3 months left. We got a potential 2, 3 rate cuts in the pipeline, perhaps. I would personally say maybe one or two. Um, and bond yields are up. Why are bond yields up? Because the data came out this this past week, uh, that the payroll job numbers, non-farm payroll numbers were very strong. Unemployment actually a little bit lower than expected, right? So the economy is still chugging along. And why are the bond yields up? Because the bond market essentially capitulated and now think that maybe the Fed, the FOMC, the Federal Reserve, won't do another 50 basis point cut. Um, or if they do some cuts, they might be one less than expected this year. So that's why we saw bond yields go up, right? So that is quite the phenomenon. Imagine, cutting rates by 50 basis points, which again was not expected. It was 25 basis point was the expectation on Wall Street. Every analyst, every economist, everyone was thinking, 25 basis point cut, which was reasonable, which is what I expected too. But Powell and the gang decided to uh, obviously bend right over, and for whatever reason, just give a 50 basis point cut. So even then, it's crazy how we see an increase in yields, right? Yeah, the economy's strong and there's less of a chance of a larger cut, but for yields to go up sharply the past week, that not expected. And here we also come back to the US dollar. You would expect the US dollar to kind of continue to maybe hold or dwindle, but that too uh, gained in strength compared to other major currencies. It got stronger, right? That's another little bit of a spike there. Same reason, maybe less cuts. I've said all along for the past year and a half, 2 years, that once the Fed starts cutting rates, you will see a weakening in the US dollar, and that's what's materialized. And you can see that starting back in 2023, this weakness, right? If we zoom in here, 2024 has just been obviously a little bit lower, but here we are, right? With that said, that's the US dollar there for you. It's quite the interesting phenomenon going on. Increase in US dollar price index, you got increases in all the bond yields. You've got gold going back up continuously, not back up, but like just continuing to go up. The moment it consolidates a little bit or pulls back a little bit, it just continues right back higher. We've got, of course, the sector, the utilities leading all the sectors this year, which is also another interesting thing. And then we got the S&P 500 at all-time highs, thereabouts again. Like, what the actual fuck? Like I just don't know how else to put it. It is so puzzling. It is so puzzling. And anyone that tells you, "Oh, I predicted this," or "I knew the market was going to hit all-time highs," oh, no, no, no. This is like absurd. You got gold flashing a signal. You got bond yields flashing another signal. You got the dollar flashing another signal. You got the market giving another signal. Like what the hell is going on? It's absurd, and it continues to be absurd. You would think that we would get some, I would say, congruency, some sensibility in the different asset classes, whether it's bond markets or commodities, but no, no, they're all kind of giving different signals, more so I would say warning signs, but that sure as hell has not materialized in the stock market. So what to do about it? Well, I will tell you what I'm doing. I am continuing to be more hands off in a sense that I'm more approaching it from a higher cash position than usual, very selective on my entries. And when I do enter long positions, I take them off more quickly. Uh, I am obviously a little bit more focused on shorting, but not shorting large cap stocks, mostly shorting any of these kind of pumps, Chinese companies and companies that are just overdone or overhyped or being pumped for no reason. So that's kind of where my attention's been the past bit, especially. Whereas I continue to remain predominantly in cash, obviously using other strategies to generate a solid rate of return throughout the year. Right now, about 38, 39% year to date return on my trading account. So compare that to the S&P 500 is about 21%, as I showed you before. I am pretty satisfied considering I'm also been taking way less risk than broader market risk, right? So like when we had these drops here back in September, when we had this drop, obviously back in August, my portfolio was insulated. My account was insulated. I didn't really feel much at all. Um, so that's the beauty, right? So less volatility, less downside, and also outperforming. So I'm happy with that. With that said, opening up the floor to questions, so be ready for that. While you guys type that in, I'm going to cover earnings. We got earnings here, another muted week. As you know, Q3 is now officially done. We're in Q4, so be on the lookout in the next 1 or 2 weeks where we start seeing earnings releases coming in. But for now, pretty dull earnings. We got Pepsi. So obviously with that, we've got Delta Airlines, coming in. We got the earnings weeks actually starting next week. We got the banks starting to report. And then there'll be the other ones also reporting into next week as well, like Goldman, JP Morgan, all that stuff like JP is actually here this Friday, but we got others, right? We got Wells Fargo here, but yeah, you're gonna have Goldman and the others next week. We got Domino's and Delta, but literally I would say Wells Fargo, Domino's, Delta, and PepsiCo, right? So you got these, in my opinion, four um, ones that maybe you want to watch and keep an eye on. Um, Now flipping to the events. So this week we have the FOMC minutes from the last Fed meeting. So this will be interesting to get a little bit more color on. Again, get a little bit more of the finer details of what was said during that FOMC meeting where they cut rates by 50 basis points. Then on Thursday, we have inflation rate, right? Year over year rate is which I want to see. This is trending down sharply, which is good. The moment we get into the high twos, which is what the market is expecting, obviously the month to month, but we got the year over year, right? That's core inflation, the 3.2 expected 3.1, but actual overall inflation, we're well into the twos, 2.5, and the market's actually expecting 2.3. So an even lower this coming after this month. Remember, this is the annualized, right? Looking at about 2.3%, which is very, very near the Fed's 2% target, right, that they aim for, annualized inflation. And then Friday, rounding that out with PPI month over month, and then consumer sentiment, Michigan. So I'm not too concerned with that. But the big one is Thursday, right? Inflation rate and core inflation month over month, along with year over year. Uh, and then FOMC minutes, we might move the markets a bit, but I'm not too thrilled with that or concerned with that. Moving back to the chart here, and now going through questions. I have one question come up here right now. My thoughts. Can we get your thoughts on J&J and PG? Of course. Johnson and Johnson, come down a bit. Definitely a better potential entry from where I was 2 weeks ago, but not quite where I feel like I want to dabble yet. For me, I'm going to draw this here so in case we do reference the stock again and also visually for you guys. So 158 area is where I'd like to see it potentially get to if it can. And then maybe I might dip my toes in, right? Although we did get this bullish candle on Friday, which is good, it's not enough for me to say, all right, all clear, we're gonna see this thing come back up. No, it's broken below the 50-day moving average. We have previous consolidation and support area before at 180, 158. And then, of course, we have the 200-day moving average around the 156 area. So keep that in mind. But for me, not really thrilled with the entry just yet. But it's a fantastic company, fantastic stock as well, right? And then they have earnings also coming up on the 15th. So another 10 days as well. So keep that in mind. PG, another great company. Also pulled back a bit, right? Once again, this is actually a little bit of a interesting setup because you have this upwards trend line. Yeah, broken below the 50-day moving average as well, but you have a lot of consolidation in this thing. This is obviously not a big mover. This is a consumer staple company, consumer staple slash maybe pharma mix kind of thing. Mostly consumer staples. So this thing obviously is not a large mover. It's not a tech company. It's not in communications. So here, especially with this indecisive candle, look at this. This is the classic doji candle. Not that I really care too much about the names or anything, but this just tells you very indecisive. If this candle is a clear indication of bearishness, this is the candle of a clear indication of indecisiveness, meaning kind of go either way. But the fact that it's broken below the 50-day moving average, I like to see maybe 166, area for potential, right? Again, a potential entry. We do know it had the lows in July around, again, crazy candles, but be leading up to earnings. But that's because of their the baby powder talc lawsuit stuff, right? That's been an ongoing drag. But in my opinion, around 166 is where I'd like to see it for a potential entry. Right now, it's right at, if you could say, it's kind of like at a long-term kind of medium to long-term support, which was previous resistance, right? So no entry yet, but definitely another great company. Great, both companies, both stocks are good to keep an eye on, have on your watch list, monitor. And then when you do want to dabble, maybe, like I measured, like I pointed out, maybe keep an eye on those two areas, 166 for PG. And when you do go in, or if you do get in, maybe consider like maybe a starter, right? We are, of course, on the precipice of the U.S. election. We've already had that 50 basis point cut. We've got quite a few warning signals from different asset classes and different markets, like the bond market, commodities market, signaling quite a few different things. So I prefer being and erring on the side of caution. Okay, that's always my go-to. But hey, for those of you that are a little bit more uh, risk on in this environment, which is fine. Again, it comes down to your style, your strategy, your account size, all that good stuff. Um, these are two solid companies that you really can't go wrong adding to or having a part of your portfolio, especially if it's more for long term or more of a buy and hold for months type of style. Okay. I got a question here. Do I expect the market to go down in the next weeks prior to the U.S. election? No, usually, you know, from a historical seasonality standpoint, we do see October and November be pretty volatile from a seasonality standpoint. But really it goes out the window because it's an election year and, we're right 1 month below. I don't foresee markets to pull back just because we're leading up to the election. The fact that we had good economic data, the market actually really liked that. I would think it would be like one of those good news is bad news type of scenarios, but the market actually liked this. Even though the odds of another large cut went down, even though the odds of, you know, three cuts went down to maybe two, the market still, you know, let's just say very much risk on and very much liked it. So we do know that if we take a look here, 5760 is kind of that 5760 area is kind of that high, all-time high area. Maybe we touch that again, but that I think you could classify as a double top. I don't want to count these as triple top, obviously, but this is consolidation here. Might see a double top here again if we get that, and then it will give me a better idea. But I don't see the market maybe dropping below 5680. This area here, 5675 in the next 2 weeks, right? Or next month. Not too much of a difference, right? If you take a look at it, it's like 50, not even 50 points, right? 5670, yeah, 100, not even 100 points, so it's going to be interesting to see. But another question just came in. MSFT, thoughts on MSFT, Microsoft sell-off. So yeah, it's a bit of a sell-off, but you know what? Like, it was already very, very peaky. Very much, I would say, priced to perfection, in my opinion. Fantastic company. Look at the 50-day moving average and the 200-day moving average, both very much converging, and then like squeezing in the middle is the last 2 days. So this is actually a relative uh, underperformance. So this doesn't have relative strength compared to the market, quite the opposite, relative weakness. The market was moving up higher last week, and then this is moving down. So I think this is a healthy pullback. That's good. Maybe if there's funds getting out, taking gains. So I would like to once again see if it can hold the 200-day moving average, which is around 415, 416. But like I said, I like to err on the side of caution. I like to have a little bit of a better margin of safety. I would welcome it going to around the 400 area. I'm not saying it will, but if it does, I would very much welcome that. I would very much consider then a position, again, all things considered, the market fundamentals and economic macro, all that stuff is pretty stable. I would maybe consider it around 400 for an entry, and that's roughly a 4%, close to a 4% drop from where it is now, right? Keep in mind we have earnings also coming, release coming in let's just say 2 weeks, right? 2 weeks time. So keep that in mind, okay? But yeah, this has definitely been a relative underperformer, uh, relative weakness compared to the broader market. One other one is Google, similar story, right? Just coming back to mind here. Take a look at Google once again. Yeah, it's picked back up from the lows back in September, but underperforming. Still from the highs, but 12% from the highs. Market's very much near all-time highs, and then again, and then this is 12% below its previous highs. So, good thing is it's definitely a little bit more bullish than Microsoft is looking, but both fantastic companies. I would like to see, both go lower for potential entries, in my opinion. All right. Any final questions before we call it? Great session, great to catch up. But with that said, I don't see anyone else typing or anything coming in here. But yeah, fantastic. Good to get acclimatized again. Yeah, Dylan. Yeah, it is. You're right. But yes, wink, wink. Um, But yeah, fantastic. Awesome. Thank you everyone for attending. If you're watching this after the fact, I appreciate you watching the recordings. For those of you obviously not subscribed, please do so. Please support, comment. It means a lot. Again, we have a no nonsense, completely transparent, open, no bullshit approach to markets, no fluff, no promoting gimmicks or shilling stuff. Okay. So with that said, thank you so much. Have a fantastic weekend, a great rest of the night, and we'll catch you on the next one.